So let's talk the U.S. economy. Mark Zandi from Moody's economy.com. Dr. Zandi, good morning.
Good morning, Tom.
Jan Hasius at Goldman Sachs models 9.4% unemployment to the end of 2012. You and Alan Blinder wrote one of the most important papers on labor economics, I'm going to guess, a year ago. Where's the job market going to be at the end of 2012?
Well, Tom, I think even under the best of circumstances, even if policymakers do roughly the right thing, we can talk about what that might be, I think unemployment probably will be just around 9% by the end of 2012. So it's going to be a tough year.
It's going to be a tough year. The president has an action plan. He doesn't have a choice like an economist to sit on both hands or on the other hand. What should be the administration's action now?
Well, I think the president's proposal is a reasonably good one. There are a lot of moving parts to it. The one part of it that I like the most, and I think it's very important for Congress to agree to, is to extend and expand the payroll tax holiday for employees for another year. If policymakers did that, that would reduce about half the fiscal restraint that's in current policy. So if policymakers do nothing, then federal fiscal policy will weigh on growth next year by about almost 2 percentage points. If they extend and expand the payroll tax holiday, they'll cut that in half, and the drag will be closer to a percentage point. And I think that would be the best thing to do.
Very quickly, Mark Zandi with us. Let's go to the Bloomberg terminal, and you see headlines from Stark of the ECB. He is leaving the ECB. He speaks in Vienna, again pushing against Eurobonds as a solution, and also Stark saying still in the middle of a debt crisis. Mark Zandi, to rip up the script here, how does that Euro crisis come over and affect Americans?
Well, there's a number of different conduits. The most immediate is through our financial markets, through our stock market. So many of our large companies have operations in Europe, and obviously they'll get hurt by this if their stock price declines. Then that has implications for households that own stocks or businesses that look at stock prices as a guide to investment and hiring. The other main conduit, of course, is trade. I mean, Europe is a very large trading partner. About 1/4 of our exports go to Europe. So if Europe goes into recession, that puts a significant weight on us. It's very important for European policymakers to do the right thing here, too, get it together and ensure that their economy doesn't go into recession.
Mark Zandi with us, a new president of the Kansas City Fed. We'll have more on that in just a minute. What a news day it is, folks. Absolutely remarkable. Esther George is the new head of the Kansas City Fed. This after the lengthy tenure of Thomas Honig. Mark Zandi, the news flow I find absolutely extraordinary. What are you focused on right now besides a new head of the Kansas City Fed?
You're right. This is really just coming from all directions. Well, obviously what's going on in Europe is very important. In fact, I just got back from a week-long trip there, and I'll have to say, folks, they are very gloomy. So we need to watch that very carefully. And then, of course, our own fiscal issues, what the super committee is going to do. They have to report out in a few months, and we need to watch that carefully. And they have to do that, and they have to do it in a reasonably graceful way. And then, of course, what Congress does with respect to the president's jobs proposal. There are many, many other things going on, but those are the key things I think we need to watch over the next few weeks, few months.
Here's Mark Zandi. Let's try to get back on. I love this, folks. Esther George. Oh, no, someone else from Harvard, someone else. We'll get to that note in a minute. Esther George, Missouri Western State University. I love that. This is not sustainable unless spirits improve. Soon, businesses will ramp up layoffs, consumers will pull back, and the economy will fall back into recession. There is Zandi. Ed Lazier feels the same way, Mark. This new layoff trend gets his attention. How bad are layoffs right now?
Well, Tom, that's the reason why we're not in recession. Layoffs have not picked up yet. The economy has slowed significantly, and that's largely because businesses have stopped hiring, and that goes to, obviously the lack of confidence. But they've not started laying off yet, so that fortunately, we're just skirting recession. But this is why it's very important for policymakers, including the Federal Reserve, Congress, and the administration, to act aggressively to restore confidence so that businesses, instead of increasing their layoffs, actually begin to increase their hiring. So we're at a very key inflection point here for business confidence in the economy more broadly.
Mark, I had a wonderful message last night from a viewer who said, okay, why is investment important? Here's the chart. Slope matters. It's semi-log. Growth in investment has disappeared. And Mark, I am going to suggest that our lack of investment is not about the crisis. It goes back longer than that. Am I right?
Are we talking about business investment, Tom?
Business investment, yes, and the GDP.
Yeah, you're
function.
right. I mean, business investment is the fodder for long-term economic growth. I mean, we have to invest to be able to raise productivity growth, which is key to the growth in our incomes and our wealth. And it's very important for businesses to invest strongly. You know, I do think that, in fact, if you look at the data, business investment has held up reasonably well. Not in structures, not in office buildings, not in warehouse space. Obviously, too much of that was put up during the bubble. But in terms of equipment, in terms of software, business investment is holding in pretty well. They've not been hiring, but they have been investing. But this is absolutely critical that they continue to do that. And one thing that could be done to help support more investment is for policymakers to provide real clarity with respect to how we're going to address our long-term fiscal problems, because businesses are very nervous about, you know, what that might mean for taxes and for spending cuts, which affects their willingness to invest things that pay off only in the long run.
Mark, let's bring up trade-weighted dollar. This is the broad dollar, including China and many other nations, than the traditional trading partners. It's a weaker dollar. Dr. Zandi, can a weak dollar rescue GDP?
It can help. I mean, I think the dollar's decline has been modest and orderly, and I think appropriate. It's been particularly against China and other emerging currencies, and this helps in terms of our trade. In fact, if you look at the key source of economic growth over the last couple of years during this recovery, it's been exports and trade, and that continues. If you take a look at the last trade numbers we got last week, they indicated that exports continue to be a key source of growth. So this is very important. Now, obviously, we don't want the dollar to fall rapidly, because that would indicate that that investors, global investors, are losing faith in stocks and bonds and everything else that they invest in here. But that hasn't happened so far. So far, the decline has been exactly what you would expect and entirely appropriate.
Mark Zandi, thank you.